Imagine this. It's November 16th, 2025, and XRP is priced at $2.19 during a broader market adjustment. Yet verifiable on-chain data reveals 149 million XRP have been withdrawn from exchanges in the past week alone, reducing liquid supply to approximately $3.8 billion. New exchange-traded products focused on XRP have launched with documented initial volumes of $58 million, signaling structured market participation. Community discussions and analytics are highlighting these metrics as indicators of ongoing ecosystem development. If accumulating 3,000 XRP fits within your independent research and risk assessment, it represents a specific exposure level to these trends. Remain for the full detailed examination, including step-by-step breakdowns of public data sources, technical indicators, adoption statistics, and aggregated community insights from today's platforms. Welcome to this comprehensive educational analysis. I'm Leo, presenting an in-depth review of XRP based solely on publicly available information, on-chain metrics, and reported developments. The focus today is on understanding the potential implications of holding 3,000 XRP at the current price point of $2.19, framed entirely through verifiable data and historical context. This content is for informational and educational purposes only. It is not financial advice, investment recommendation, or solicitation to buy or sell any asset. All viewers must conduct their own thorough research, consider their financial situation, and consult with licensed professionals before making any decisions. Markets involve risk, and past performance does not indicate future results. To establish a solid foundation, let's begin with the fundamental role of XRP within the XRP ledger, or XRPL. The XRPL is a decentralized open-source blockchain designed specifically for efficient value transfer. XRP serves as the native asset, enabling near-instant settlements, typically 3 to 5 seconds, with average transaction costs under 1 cent. This efficiency stems from the consensus protocol, which avoids energy-intensive proof-of-work mechanisms used by some other networks. According to Ripple's publicly released quarterly reports, over 300 financial institutions worldwide have integrated Ripple's payment solutions, including on-demand liquidity, or ODL, which utilizes XRP to source liquidity for cross-border transfers. ODL has demonstrated cost reductions of up to 60% compared to traditional correspondent banking models, as detailed in case studies with partners like Santander and SBI Remit. Expanding on adoption metrics. The implementation of ISO 2022 messaging standards is a key development. This international framework for financial messaging is being rolled out across major payment systems globally, with full compliance targeted in regions like the European Union and parts of Asia by late 2025. XRPL's native compatibility with ISO 2022 positions it for seamless integration into these upgraded infrastructures. Recent data from Ripple indicates that ODL volumes have grown more than 220% year-over-year in the most recent quarter, processing billions in notional value without relying on pre-funded accounts in destination currencies. Now, turning to current market conditions as of November 16, 2025. The spot price of XRP stands at $2.19, reflecting an approximately 4% decline aligned with broader cryptocurrency market movements, where Bitcoin is trading near $92,000 and experiencing similar pressure. However, XRP-specific metrics show divergence. On-chain analytics platforms, such as those tracking exchange balances, report a net outflow of 149 million XRP from centralized exchanges over the recent period. This equates to a roughly 4% reduction in exchange-held supply, leaving an estimated $3.8 billion in readily available liquidity for trading. Such withdrawals are often interpreted in analytics as a shift towards self-custody or long-term holding, potentially reducing immediate sell pressure if buying interest maintains or increases. A significant recent event is the launch of a US-domiciled XRP exchange-traded product by Canary Capital. Public market data confirms day-one trading volume of $58 million, which ranks among the higher debuts for similar products in 2025. This product provides regulated exposure to XRP for institutional and retail investors through traditional brokerage accounts, without direct custody of the underlying asset. Inflow metrics associated with such products have shown structured increases, with reports indicating heightened participation from qualified investors. This development follows regulatory clarifications from prior years, enabling these vehicles in compliant jurisdictions. Delving into technical analysis for a clearer picture. On the daily timeframe, XRP is consolidating within an ascending triangle pattern. The lower support trendline connects highs from recent weeks near $2.16, while the upper resistance sits at approximately $2.35, a level tested multiple times following announcements related to RLUSD pilots. The Relative Strength Index, or RSI, on a 14-period basis reads around 45, indicating neutral momentum, not oversold nor overbought, and leaving potential for upward movement without immediate reversion risks. Trading volume has averaged 12% higher than the prior week's levels, per aggregated exchange data. Moving averages provide additional context. The 50-day simple moving average is at $2.05, acting as dynamic support, while the 200-day sits at $1.45, confirming a longer-term uptrend since early 2024 lows. To quantify potential scenarios using basic arithmetic based on public projections, at the current price of $2.19, acquiring 3,000 XRP would require an outlay of approximately $6,570, 3,000 multiplied by $2.19. If market capitalization expands to reflect increased utility adoption, for instance, capturing a fractional percentage of the $800 billion annual global remittance market, which grows at about 8% per year, according to World Bank estimates, the price per unit could adjust accordingly. Conservative models shared in public analytics suggest a range of $5 to $10 by the end of 2025 under conditions of sustained ODL growth and stable inflows. At $5 per XRP, the 3,000 unit position would value at $15,000, 3,000 times 5. At $10, it would reach $30,000, 3,000 times 10. These figures are derived from supply and demand equations. Total circulating supply is around 56.7 billion XRP, with market cap currently at $132 billion, 56.7 billion times 2.19 approximately. Reaching $500 billion market cap, a level discussed in some adoption scenarios, implies about $8.80 per XRP. 500 billion divided by 56.7 billion. Further ecosystem expansions include the RLUSD stablecoin, a US dollar-pegged asset issued on the XRPL. Public pilots with entities like MasterCard have been announced, creating a complementary loop. XRP for bridging liquidity, RLUSD for stable value storage. This dual asset model enhances usability for institutional flows. Additionally, the XRPL supports automated market makers, or AMMs, for decentralized exchange, as well as non-fungible tokens and tokenized real-world assets. Pilots in tokenizing commodities and securities are documented in developer updates, broadening the ledger's scope beyond payments. Community and public platform insights from today provide real-time context. Various analytics accounts have posted about the exchange supply reduction, with one noting the 149 million XRP outflow and linking it to anticipation around exchange-traded products. Engagement on these posts includes discussions of network activity, which has seen transaction counts increase notably. Another public model, generated using data analysis tools, projects $5 to $10 ranges based on liquidity constraints and historical inflow correlations. Threads explore hypothetical foreign exchange capture. The daily FX market averages $7.5 trillion in turnover per bank for international settlements data. Even 0.1% migration through efficient rails could significantly impact valuation metrics. Risk factors must be thoroughly acknowledged for balanced education. Cryptocurrency markets remain highly volatile and correlated with macroeconomic events. Bitcoin's current positioning could influence altcoin liquidity in the short term, with potential tests of lower support levels if selling pressure persists. Historical cycles demonstrate drawdowns exceeding 80% during bear phases, and XRP has experienced similar volatility. Escrow mechanisms release 1 billion XRP monthly, though the majority is relocked. Transparency is maintained via public ledgers. Geopolitical, regulatory, or technological shifts could alter trajectories unpredictably. Addressing common inquiries from public forums. Concerns about centralization are countered by the decentralized validator network. With over 150 unique validators, globally utility versus speculation. Value accrues from transaction fees burned, deflationary, and ODL usage, not solely market sentiment. Decoupling observations. While short-term correlations exist, exchange-traded product volumes have shown resilience, increasing 1.2% on days of general declines. Aggregated projections from diverse public sources. Short-term targets cluster around $2.50 to $3.50 based on breakout patterns. Medium-term, 2026 averages span $10 to $20, contingent on continued adoption metrics like ODL volume doubling again. Mathematical basis. If quarterly ODL reaches $100 billion notional, bridging fees alone contribute to demand XRPL capacity at 1,500 transactions per second natively, with sidechain scaling to 65,000, supports enterprise loads far beyond current levels. Environmental considerations. The XRPL is carbon neutral certified, consuming energy equivalent to a few households annually, appealing for ESG compliant portfolios. Partnership breadth. Public disclosures list integrations across 5 continents, from money transfer operators to central bank digital currency explorations. Why the specific quantity of 3,000 XRP in discussions? It serves as a modular benchmark for calculations, easily scalable and representing meaningful exposure at current valuations without implying overconcentration. Diversification across assets and strategies is a standard educational principle. Recapping core data points for reference. Price $2.19. Recent exchange outflows 149 million XRP. Exchange traded product debut volume $58 million. ODL year-over-year growth over 220%. Global remittance market $800 billion with 8% annual expansion. Circulating supply approximately 56.7 billion. Current market capitalization $132 billion. In summary, the XRP ecosystem demonstrates quantifiable progress in payment efficiency, regulatory-enabled products, on-chain supply dynamics, and network scalability. The analysis of 3,000 XRP at $2.19 is presented purely as an educational example, using public metrics to illustrate potential value changes under various adoption scenarios. Again, this is not financial advice. Viewers are responsible for their own informed decisions. For those finding educational value in this detailed metric review, consider liking the video to support data-driven content, commenting with your independently researched views on 2026 metrics, subscribing for ongoing updates on blockchain developments, and sharing within educational communities focused on payment technologies and distributed ledgers.